G'day guys, welcome back to the Devon Too Good Investing channel. Today we're going to be reacting to Jeremy from Financial Education on his opinion about Alibaba stock. As we can see, he has titled his video Alibaba stock 3x easy or going to zero. Well, let's find out if he answers this question, and then as he goes through the video I'll share my thoughts and opinions on what he says. So let's not mess around and get straight into it.
Well, howdy there folks, and welcome into today's video, which we talk about Alibaba stock. I've seen so many comments from folks over the past few weeks, let's put it that way, about me doing a breakdown of Alibaba stock. Is this a stock I'm interested in buying? I used to own this stock back in the day, did very well for us. I'm going to kind of give my 2 cents about this stock. We're going to talk about the stock price, which, let's be honest, what is the reason I'm doing this video here today? Because everybody has seen this stock price crash, okay? And so everybody's like, I know Jeremy likes some beaten down dog stocks. Is Alibaba one of those? So we'll talk about that, okay? We're going to talk about the financials of this company, some really good things this company has going for it, and some really bad things, okay? And then lastly, we're going to talk about the elephant in the room. The thing you got to understand about Alibaba is there's not one, there's not two, there's 3 elephants in the room when it comes to Alibaba stock, and you got to understand those, okay? And so today I just want to look at the stock as objectively as possible and not give some biased opinion on this one, and just give you kind of the facts, in my opinion, on this, and if this is worth taking a risk in the stock and hopefully making a ton of money, or if it's not, and my 2 cents on that. So hope you guys enjoy this video here today. We're going to dive into this one. All I ask in return is that you smash that like button. That is literally it, guys. I hope you appreciate me doing this video for you here today. And talk about Tmall, Taobao, AliExpress, all their beast businesses, their cloud business, okay? I mean, Alibaba is a beast. This is the Amazon of China, essentially, okay? Now, their business models will operate a little differently than Amazon does, but at the end of the day, understand Alibaba is a beast, and it is likely just going to continue to become more and more of a beast over time. You can't say anything.
So guys, Jeremy mentioned the e-commerce businesses, in particular Taobao and Tmall, and he also brought up the cloud business. Alibaba also have a 1/3 stake in Ant Financial, which is a payments processing business. I suppose you could kind of compare it to a PayPal, or it's like a cross between maybe a PayPal and a Visa. It's pretty much an app with, you could call it pretty much a financial super app where you can pay for things, you can get loans, all this and that. And they also have a lot of international businesses. They're deep inside businesses such as like Lazada and whatnot. But yeah, they got so much, so much.
Anything bad about their actual business model. Like, you just can't. Like, it's a beast. Like, when you look into this company and how many different divisions their company has, and how many of those divisions are reporting amazing growth, you can't say anything bad about the fundamentals of their actual business, okay? Now, the stock price is a completely different story, right? 1 month, the stock price is down 19%. 3 months, the stock price is down 24%. That's likely why I'm making this video, because the stock is being hammered and everybody wants to know, is this a good stock to buy or is it not a good stock to buy, right? The stock, as far
that's why everyone's making videos right now.
$152 to $319, right? Today, as of recording this video, the stock is sitting at $162 a share, right? Keep in mind, the S&P 500 is near all-time highs, the Dow's near all-time highs, the Nasdaq's near all-time highs. Like, almost all the indexes are near all-time highs. You have big tech, also almost all near all-time highs, right? They're not all at all-time highs, but a lot of them are pretty darn close. And then you have Alibaba, which is a 400.
And guys, maybe a little bit off topic, but the S&P 500 might be at all-time highs, but the S&P 500, you got to remember, it's made up of obviously the largest companies in America, the top 500 largest companies, but it's weighted towards especially big tech, like the likes of your Apples, your Googles, your Microsofts, your Amazons. They make up a big portion because it's weighted based on market cap. So if you look away from some of these bigger businesses, you start digging through the weeds at some of these smaller caps, maybe these micro caps under $2 billion, these businesses aren't their all-time highs, and that certain group of businesses, you might find a few gems in there, but let's keep going anyway.
$400 billion plus beast here at near 52-week lows, right? Like pretty darn close, right? And so this is when you get into the situation when people are like, what is going on here? The company's a beast. It's amazing. They're not a one-trick pony. They have so many different businesses. They're expanding internationally. Like, what is going on? But the stock is just getting devastated, okay? There's 45 analysts that say buy the stock now. 45 of them, okay? There are 4 analysts that cover the stock that say just hold the stock, don't buy it, don't sell it, don't do anything, just hold it if you own it, okay? And there's one analyst that says sell the stock, okay? Now, when you see that, makes the stock even more alluring, right? I mean, it's like, okay, the fundamentals of the company's a beast, right? It's near 52-week low, while all other stocks have been doing amazing. And then you have 45 analysts that say buy this stock now, and only one analyst that say sell. Like right here, like you could sell most, most folks out there that are looking for like, okay, 45 analysts say buy, one says sell, I need to buy this stock, and it's near 52-week low. Oh, that's pretty darn intriguing, right? Now, the company has 1.18.
So not only are the analysts really bullish on Alibaba, not that I take too much weight into what the analysts say, but I like to recognize what some super investors are buying, and we can see Alibaba Group here in Dataroma, and we can see some really prominent value investors buying into Alibaba, and this shows up in their 13F filings, and we can see Greg Alexander, he owns 21% of his portfolio in Alibaba. Pabrai, he's got 21% of his portfolio in Alibaba. You can see Charlie Munger, 17%. And these are pretty bloody high conviction. We can also see Guy Spear. He's got 5% of his portfolio, and he is a very well-known value investor. And there's plenty more investors. We can see Bill Miller. We can see David Tepper. See Lee Ainsley. Just very prominent names in the value investing world. But let's get back into it, because I think Jeremy's about to go into the fundamentals now.
Billion annual active customers, as they call it, okay? 900 million plus are in China, which is a massive market that just continues to get bigger and bigger. I mean, geez, at the end of the day, maybe every single person in China is going to do some sort of shopping on one of Alibaba's properties over time, right? 265 million that are international. So the company has a big international base as well. It's just that when it comes to a company like Alibaba, China's so dang big that it just dwarfs the international numbers. But let's not confuse, like that's still a massive number, okay? 265 million users internationally, right? Now, their latest quarterly numbers that didn't come out that long ago, okay?
Yeah, that's insane. Let's just have a look at China's total population. So they've got 900 million active users in China. So if we have a look at China's population, we can see about slightly over 75% of the country is using Alibaba, which is just insane. It just shows how big of an ecosystem Alibaba have, and it just shows this shows their economic moat and their competitive advantage.
34% revenue growth this company reported, which is absolutely amazing. Adjusted EBITDA, however, was down 5%. That's not something usually you want to see. Adjusted EBITDA is many times investors' favorite number to look at if they're thinking anything in relation to like profitability of the business. They want to see adjusted EBITDA because that takes out a lot of one-time expense. That takes out all one-time expenses, non-recurring charges, things like that. Okay, so adjusted EBITDA being down 5%, it's kind of like, okay. Especially when you have 34% revenue growth, like you would have thought that number would at least be positive. It's usually even better to see adjusted EBITDA up more than revenue, ideally. But obviously, that's not the situation we have here with Baba, okay? Net income was also down 8%, okay? Usually you want to see net income growing faster than revenue. Obviously that didn't happen for Alibaba, especially when it's more of an established business, which Alibaba's been established for a long, long time now. It's not like this is some new company out there or something like that. So to see net income down, not ideal. Free cash flow was also down quite considerably, 43%, okay? Now, if you're looking for the negative numbers, there you go, as far as the negative numbers. Now, outside of that, I mean, it's going to be really, really hard to find any negative numbers for this company. I mean, everything else is pretty dang good. Those are 3 real big negatives that I saw in relation to their latest quarter, okay? Cloud. Now, back when
So, as Jeremy said, they grew 34% in revenue in the previous year, which is really, really great. That's well outpacing Amazon, and considering the valuation of Alibaba right now, it's trading in 52-week lows. It is really compelling seeing that 34% revenue for where Alibaba is valued right now. However, he did mention we saw net income down, we saw EBITDA down, we saw free cash flow down. However, I've listened to Alibaba's investor presentations and conference calls and whatnot, and the company's management do explain that this is because they're investing a lot of money into capital and investment right now, trying to grow that business. So hopefully we'll see that revenue continue to increase, and then we'll get that net income on the back end, maybe pushed out a few more years. But to me, I think Alibaba will remain they'll continue growing their free cash flow out into the future. I'm not overly concerned.
I was investing in Alibaba, I would say my second biggest bullish point for this company, after obviously the e-commerce opportunity, was around their cloud business. I looked at what was happening with Amazon Web Services, and I said, I think Alibaba is going to be the Amazon Web Services of China, and maybe potentially Asia in general, right? And this was going to be a huge cash flow machine. You saw that happen at Amazon. What we witnessed with Amazon was Amazon Web Services became a cash flow machine and a profitability machine for Amazon over the past several years. And I looked at Alibaba in their cloud business, and it seemed like it was another AWS, just several years younger, and with a huge Asia opportunity in general, right? And look at here, adjusted EBITDA was positive from negative for this company, which is another great thing to see, okay, in regards to that cloud business and becoming hopefully a profit machine for this company, all right? Now, the current P on this company is 19.
So let's just talk about the cloud for a moment. So it grew 29% year over year, and you'll notice that's actually slower than the overall revenue growth of 34%. So technically, the fast growing cloud business was actually a drag on the revenue growth. But from doing deeper due diligence into why this was, Alibaba pretty much lost one of their largest cloud customers last quarter, or within the last few quarters, and that was to do with the English part of TikTok discontinuing using Alibaba's cloud service. So they lost that revenue, and if they hadn't have lost that revenue, their revenue growth for their cloud segment would have been well in the region of 40 to 50%. Furthermore, the cloud business that Alibaba have is actually the third largest cloud business in the world, and it's the largest in the eastern part of the world. So it's only behind Amazon and Microsoft in terms of cloud.
Not expect, like a 19, you should expect that if it's some value stock that doesn't have much growth, right? This company just grew revenues 34%. Like, the number's amazing, 34%. Like, you would think this company has like maybe 4% revenue growth, not 34% revenue growth. That's crazy, okay? Forward P is 17. A forward P of 17 is disgustingly low for a company with 30+% revenue growth in the latest quarter. And keep in mind, Alibaba's supposed to keep growing for years to go in the future, and I have no doubts that that will happen, right? So the only concerning thing is that maybe it's somewhat close in terms of the current P and forward P, so it's not like they're expected to do some massive leap up in profitability. But at the end of the day, the stock looks like a deal steal up until...
Okay, so let's have a quick chat about valuations. So you can see the trailing PE is 19 and the forward PE is 17, and Jeremy's talking about how because the forward PE isn't much lower than the trailing PE, this indicates slower earnings growth moving forward. And I've already addressed this point just before, and pretty much Alibaba are pretty much foregoing these short-term profits to reinvest money back into their business in order to grow the revenue more, capture more market share, and then drive greater profits in the future. That's my perspective on it anyway.
We discuss the three elephants in the room, okay? If this was all that was going on with Alibaba, I'd be buying the stock hand over fist. I would be buying probably 2024 call options on this, which are likely coming out next week, okay? But there's the three elephants in the room, okay? The first elephant in the room is the US government. There's been a lot of talk about potentially delisting the Chinese stocks and just an overall very negative sentiment between the United States and China, okay? And this really started to take off under obviously the last president. He would come out and he would attack a lot of these Chinese companies, China in general, and this is where things started to brew from. And honestly, it seems like it hasn't gotten a lot better under the new administration either. There's still a lot of negative sentiment toward Chinese stocks. You're still hearing rumors about delisting of these companies, taking them off the exchanges, things like that, okay? That's the first elephant in the room. The second elephant in the room...
All right, well... Let's address that first elephant in the room then. So Jeremy mentioned the first elephant in the room was the risk of the US delisting Alibaba and other Chinese stocks off the American exchanges. So yes, it's definitely a risk, but will this cause Alibaba to go to zero? Hell nah. And this is why. So if Alibaba gets delisted off the New York Stock Exchange, it will just trade over the counter. You'll still be able to trade your shares. If it's trading OTC, that usually means that there'll be less liquidity and whatnot, but you will still be able to trade your shares. Also, you can, like, the New York Stock Exchange listed BABA is fully fungible with the Hong Kong listed stock. So you can trade your ADRs of Alibaba into stock within the Hong Kong Stock Exchange. I believe that one Hong Kong stock is worth 8 ADRs of Alibaba or something like that. So you can trade your shares over. And also, it might not go to zero, but if this does happen, this will drive a lot of fear and it will drive a lot of selling. I'd imagine Alibaba stock would drop on this news, but would it change the long-term trajectory? Probably not. Will it make the stock go down in the short term? Definitely. But you're not going to lose all your money. I've pretty much just told you what will happen. And that's that. Let's keep moving on.
In regards to Chinese stocks in general, or especially big tech, is China doesn't like a lot of the big techs. Like when you see this, a lot of the commentary coming out of China in relation to the big techs, it almost sounds like they're not happy with a lot of them, including Alibaba, right? And we know there's been a lot of drama between Jack Ma and the Chinese government over time. Now, keep in mind, Jack Ma is now removed from Alibaba pretty much completely, but he still owns a ton of the company. And on top of that, think about it like this, right? Think about it like this for a perspective, right? At the end of the day, who's the first person you think about if you think about Alibaba? That's Jack Ma. If you have any sort of mental image around Alibaba, it's still Jack Ma, right? And there's obviously negative sentiment there. And so you kind of almost have China kind of feeling like the enemy there. Then you can say, well, this happens sometimes with US companies where certain politicians will come out against big tech companies. Here's the difference, okay? A few politicians coming out against big tech companies, not a lot's going to happen, okay? In China, the government is really seen as one, and they will do whatever they really want to do. In the United States, there's all these protections and all these things where, like, you can't really come against us and things like that. Like, it's almost impossible to imagine the United States just being like, we're taking over Amazon, or we're running Amazon now. Like, you can't even conceive that, because that would be the breakdown of the United States, the start of the downfall, right? Like, everybody would just go crazy, like, oh, whose business is next that the United States is going to take? In China, is it that crazy to imagine that? I don't think so, right? And so that's the second elephant in the room. The third elephant in the room is...
Okay, so the second elephant in the room that Jeremy listed just then was China cracking down on big tech in China. So one thing I just like to point out is Alibaba makes out about 2% of China's GDP. It is an essential business for China. Could you imagine, like, taking away Alibaba from China or from the Chinese citizens would be like removing Alibaba from, removing Amazon from America. Imagine life without Amazon, or imagine life without Google. Just imagine life without those two businesses. That's what it would be like if they took away Alibaba. Also, you got to think about the segments of Alibaba. Like, I just can't see the Chinese government trying to hurt, particularly e-commerce and cloud and that sort of thing. But maybe they would have a go at Ant Financial, because within that business they have a lot of data, and possibly the government would want to control that data. But I think Alibaba has less risk than another Chinese business in the tech space, such as Tencent, because Tencent are going after gaming and streaming and that sort of stuff. I could definitely see China wanting to put some imprints into those sort of industries. But within e-commerce, I think China sees it as essential. And look, I don't know. I just don't necessarily agree with Jeremy's point there. But that's okay. He presented a valid argument too. So let's move on.
Exponentially bigger than both of those two, okay? The third elephant in the room is the fact that if you buy Alibaba stock, you don't really own anything. You're buying a shell company in the Cayman Islands that has no real assets, no real anything. You're buying the hope that you think you might own Alibaba stock. It's a very different share structure than if you buy into an American corporation. Let's say you buy Apple stock. Talk to any securities lawyer, okay? Anybody, especially any highly advanced securities lawyer, which I'm fortunate I know a lot of them. And every single one of them will break down the immense difference in ownership share structure you have in owning a US company, like let's say Apple, versus owning a Chinese company like Alibaba. It's like night and day, okay? And the reason this is scary is when you hear the US and China being combative and the potential delisting of these stocks or something like that, you might think I'm guaranteed to get something, right? Not at all. Not at all are you guaranteed anything, okay? If all of a sudden Apple decided to do some crazy thing and delist or something like that, and there's so many protections in place to make sure that doesn't happen. But even if it did happen, like, you have so much legal power to sue the crap out of so many people involved in that, it'd be ridiculous, right? Who are you suing if Alibaba decides to delist? Good luck. Good luck. You're going to sue the Chinese government? You're going to sue China? You're going to sue Alibaba? Good luck. That's all I'm going to say about that, okay? And that is the biggest elephant in the room. And so that's why I decided to, take my money and run quite a while ago out of Alibaba, because I looked at it, and when I bought it, I was like, okay, I'll buy a certain amount of this. I can get past the share structure. But then when the US government started to get very, very negative on Chinese stocks, at the same time as, China is kind of hating on a lot of these big techs as well, and you have that messy share structure situation where you're basically own some shell company that doesn't even have any assets when you buy this actual stock, that's where you get into some crazy things. And I hope everybody understands, like, I'm not just making this up. Like, literally hire any advanced securities lawyer out there, and they will all break it down to you on what you actually own when you buy Alibaba stock. And I would challenge, like, anybody that has 6 figures, 7 figures plus in the stock, hire a securities lawyer, okay, that is very familiar with the law and very familiar with SEC regulations, those sorts of things, and they will break this down to you to a T. And you'll find, oh my gosh, it's actually really, really scary, okay? So if you can get past those elephants in those room, those 3 elephants in the room, then there's no question this is a great stock. There's no question this is a great stock until you go to the elephants in the room. And when you get to the elephants in the room, that's where things take a...
So guys, let's just discuss the third elephant in the room, and that's the share structure of Alibaba, and that you don't actually own the underlying shares. You own some version of a shell company in the Cayman Islands, and that's pretty much what you own. And that is right. I don't think Jeremy explained it as well as he could have. This is actually called the VIE structure, and pretty much it's a contract saying that you own this shell company, and you pretty much have no recourse if the company goes bankrupt or anything like that. But let's not get it confused. Jeremy was kind of like alluding to if Alibaba got delisted, you wouldn't get your money, but that's just not true. It's the only way you would lose all your money is if the Chinese government decided, hey, we're going to make this VIE structure illegal. We don't approve of it. Okay, well, if that happens, you've lost your money. But let's think about the ramifications of China actually deciding to invalidate the VIE structure. That would wipe out all foreign investment into Alibaba. It would wipe out all foreign investment into China, and it would crush foreign investment in general into China, and it would crush the trust between the US and China. It would crush the trust of pretty much any country that's invested into China. So if you think about it logically, I would say the odds of this happening are very small, as the ramifications for China would be very bad, as well as the ramifications for foreign investors into China. So it would be a lose-lose situation, and it would hurt China just as bad as it would hurt these foreign investors. So I think it's a case of risk-reward. And that's right. Jeremy did mention that you do have to be okay with these risks. And if you weight your portfolio accordingly and don't overexpose yourself, knowing that that is the worst case scenario, then hey, I think there's a lot of money to make, and it could be a 3x easy over the next few years. Is it going to zero? The only way it's going to zero is if the VIE structure gets invalidated. Not if it gets delisted, not if China put more crackdowns on Alibaba, only if the VIE structure gets invalidated, which then in turn would prevent pretty much any foreign investment to China, which will hurt China and will hurt everyone involved. Now let's roll the rest of this and see what Jeremy's got to say.
Take a sharp turn, for the worse. And so that's why I can't buy the stock. I love this, man. I love this. It's, this company should be trading at 2x to 3x of valuation it's trading at. This stock should easily be at a 35 PE, a forward PE, if not a 45, 55. When you look at the growth this company has, there's no question this stock should be triple the price tomorrow. Until you view the elephants in the room, and that's where it's like, how can I own this thing, man? It's just, it's a scary stock. So if you can get past that, I understand. If not, I understand as well. And so for me, it's not a buy for the elephants in the room, but the business is a beast. You can't say anything bad about it as far as that goes. Valuation numbers wise, it's amazing. So hope you guys enjoyed this video. As always, all I ask you.
All right, guys, that's all for this video. Hope you enjoyed it. I hope you enjoyed Jeremy's perspective on Alibaba stock, and hope you enjoyed some of the inputs that I put into Jeremy's opinion as well. But yeah, that's all for today, and have a good one. Cheers.